Good weekend, all. Ira Epstein with your weekend edition of your financial market wrap-up. And this is for Friday, the 28th of February, 2020, about 4:35 in the afternoon. You know, the first thing that comes to mind, I was watching financial TV, watching the end of the day wrap-up. CNBC has a great wrap-up show. The problem is they're all trying to make the charts make sense. And when you have a virus like this, I don't know that anything can make sense. You're not in a situation where the economics are at work. You're in a situation where panic is at work. You're in a situation where every time they announce there's going to be another American with another case of this virus, or a group of Americans, God forbid, that the market goes into a panic stage. That's what you have to consider. Now, right behind that, of course, are the sets of fundamentals. It can't help the banks, the financial sector, that interest rates are going down as much as they are. Spread on money, something the banks live on. Are they lending right now? I have my doubts. You can take your mortgages at 3.5, go qualify for one. That's my point. This changes too. I mentioned yesterday that I'm old enough to have lived through the polio, the measles, chickenpox, mumps, all these types of viruses that went around. I remember as a kid in school, you wouldn't go to school because there was contagion. You couldn't go those times. Well, we could get that too. My point is there's a beginning, a middle, and an end to all of these viruses. This too will come to pass. The problem is right now we're in that zone where it's at the worst cases of it. So we see that it's spreading around the world. We don't know when it will end. There's not enough known. There's no vaccine for it. And we saw a lot of money come into these markets, absolutely froth money after the first of the year to February 19th, when the financial markets, actually, if you go back on the chart, peaked out. So as we step here and we look at that peak on a monthly basis, and this is the end of a month, the market is still over on a monthly, the 18-month moving average of closes. Therefore, I would not be surprised to see support lower in the 2907 level. We'll see if that makes any sense or not, but that's the first target on the downside. When we come on the weekly charts, now this is different. The market has gone from higher highs and higher lows into that pattern of a washout. Where that washout comes back to, well, the resistance is 3202. The people that got in up here, it's going to be a long time, in my opinion, before we just turn around and go. Could it happen? Yes. The odds of it are not there. They don't even know how long this virus stays contagious. Is it going to end in June? Is warm weather going to make it end? There's a lot of unknowns. That doesn't mean the world is ending. The market is pricing in that event. When we take a look at how the swing came down, well, this is still a support zone. And yes, I'm using charts on that, but it is. So you slice through this euphoric move, and you've come back to where the market was last summer through October. That's what I'm seeing. Can it go through that? Of course it can. I am not. Nobody is, in modern time now, used to this virus situation. When's the last time we had anything like this? SARS and MERS, not as big a play as this is getting. So when we come in and we take a look at the swing line broke, and you can see it. Coming into this week, you had higher highs, higher lows. You break the pattern at 3212. Not a bad idea. That broke it, and from there, you went down another 400 points. Everything does come to an end at some point. That ended this upswing. When we look at moving averages, let's come back. Again, looking at the 3212 area, when you get under it, now you're under also the 18-day average. Where did the market stop on the first break? First, it went to the 100-week moving average of closes. Where's the Bollinger Band? Right above it at the 2984 level. So that combination, and how often do you hear me say it? The combination of a Bollinger Band and the 100-day average did its job. It contained this level of the break. If you're going to get more bad news, it might be the 200-day, and that's down here at the 2632 level, just so you can see where it's at. Momentum-wise, you turned it down. So you have not a trend, you've got a vertical price break. You've gone into your first level of support, momentum is down, and this market is not working off of anything the Fed or other central banks can do. It's going to work off of a disease that doctors can fix, scientists can fix, but not financial markets. Got that? When we come to the NASDAQ, same thing. The NASDAQ, and I remember because about a week ago I was telling traders to put on a NASDAQ trade and it didn't work at the end of the week. And I'm going, wow, I was surprised at that. But looking back, it was probably a good loss because, you're playing the trend to continue. It didn't. This market, once it got under right here, 89.25 and a quarter, the market let go. The market is now looking at the Bollinger Band and the 100-day average if you get more bad news. Just like we saw in SP, wouldn't be surprised if it fights there. What if it gets a piece of bull news? What if something's not so bad? Well, we'll see if the 18-day average on the way up fights that. But remember, you're out of a trend. You're not trending at this point. Same in the Dow. And in the Dow, the disappointment is, if you look at this break, this was the 21st, this today. You didn't even stop at the Bollinger Band on 100-day average. I look for that to normally be the stopping point. On a rally, I look for that to be resistance. If you get a piece of bad news, watch your 200-day moving average of closes, 23,528. In the Russell, the market's been in a downtrend. So let's start something else. We've had lower highs, lower lows. You didn't have a close under the 18-day average. You did it all at one time, got to the lower band. What I do teach, and I won't change my opinion, the first challenge of a Bollinger Band, wherever it's hit, I think pros take money off the table. End of discussion for me. That's what I think. If you think I'm smart enough to play a disease, God bless you. Then another thing I watch. The last time the VIX got up near 50 was a peak out in the market. It can go higher, but you go back and you look, this is all the fear you can imagine in the market. One of the things in my morning subscriber video I was smart enough to say, and at my end of the day videos, I said, I don't think the pros are going to sell this market over Bollinger Bands or against them the way they did, because it's not a financial situation. It's a panic mode. And that was probably a pretty smart move as I analyzed that. And I've been on TV this week, and I've been writing in my newsletter. You know what I've been writing in my newsletter? I don't mind telling you the recommendation. Stay in cash. There's going to be opportunity. Do you think you can call what's going to happen this weekend? You can't, but you can react to it next week, because you got from then until the following Friday before we get waiting 2 days again to see what's going to develop. Is this a breakout of sideways action? It most certainly has been an attempt at it. Came up here, you closed at 131.27 over the upper Bollinger Band. This week, 134.27, you're over the band again. That's 2 weeks in a row. I consider that a breakout to the upside. So now the question to me is, how high is high? And I know you're going to say, Ira, you do realize you're at 116 or whatever in the 10-year notes, and I know it. I also know that what's laying in front of this market is central banks' intervention from everywhere. Not only our Fed. I think you've got all the countries that can, be it the G7, be it the Bank of Korea, given that moment, they're going to stimulate. So I have a hard time thinking we're going back to higher interest rates anytime soon. I realize that when you get up to the first challenge of a Bollinger Band, weekly chart or daily chart, the market is euphoric. It is so hard to fight the tide to say I'm going to take some money off the table. I've been there, have done it. Market goes up again, now you're killing yourself. You need 2 weeks in a row over, and you didn't get it. You pulled back. So whatever reason, this market and the dollar is pulling back. It is in an uptrend. It's got higher lows, higher highs, but momentum turned on you. So now at the 18-day average, down into the 100-day and the Bollinger Band, I'm going to look for support in that. I still think the dollar's the best of the group of currencies out there. In the eurocurrency, all you did, if you look at the chart, you got down to the Bollinger Band, closed under it, another time, and now you're pulling back. That's what, an attempt at a breakout. This is the rally. I wouldn't be surprised to see the selling come into the market. You're not trending. You've gone from a higher high to a lower low, and you're staying within bands that have widened out. But they've actually widened out to the downside. I'm not convinced that the euro currency has made a turn. In the Canadian dollar, first challenge of the Bollinger Band. I know it's Corona. I know the indigenous tribes that are giving Canada a hard time. I know all those fundamentals. Doesn't matter. You hit that number, I think smart money takes some money off the table. That's what I think. In the Japanese yen, what can I tell you? You got down, lower Bollinger Band, money should be taken off the table. And I'm sure down here you're going, that son of a gun. I didn't see this coming, but the odds favor you're going to bounce away from that Bollinger Band. You don't do it all the time. I don't know anything that works all the time, but go count. Go do your work. You'll see what I'm getting at. And that's what trading's about, playing percentages. When they're drawing chart lines on, they're playing percentages as to what the market will do, be it retracements, move forwards, where something goes. Bitcoin. On the weekly chart, it's still friendly. The daily chart got into oversold territory, held the Bollinger Band. The weekly chart is still out and out bullish. Higher lows, higher highs, trying to support itself at the 84.34 level, which is the, on the weekly chart, the 18-week moving average of closes. Got down there to 84.30. Let me just show you that. Back to 86.62. So the longer-term chart has not turned on the Bitcoin. When we look at the differential of Brent and WTI, it got on the weekly charts down to 415. If it rallies often, that red line, the 18-week average of closes, will act as something of an area the market goes to for neutral zone. It did that when it pulled back here. Notice how on this slip back, it played in that zone. That's what you're doing right now. We have to wait and see what it wants to do. But when you come to Brent by itself, it's just out and out bearish. We have an OPEC meeting coming up. They're talking 1 million barrel a day cut. They're almost forced to do it. I mean, if they don't, the market just keeps getting more of their oil. I don't know that Russia will join in or not. We haven't heard anything on that. But the market knows there's the talk of 1 million barrel cut a day. Lower highs, lower lows. The U.S. is selling, by the way, out of its strategic reserves, and it has to, by law, 12 million barrels of oil. It's a big number. Remember, you're talking OPEC cutting 1 million barrels a day. It's 12 days of that extra oil still going to be coming on. In the WTI, you went to the lower Bollinger Band. You're trying to hold it. I wouldn't be surprised if you get a bounce, but the trend is down. And it's not this week it's been down. It's been down. That's a downtrend. Lower highs, lower lows. The first challenge of the Bollinger Band, if it's hit, and that's the if, will it be hit? That was 50.97. It didn't, yes, it hit it right here. That was 51.13. It's been playing at it. That's basically what's been going on. Bounced away, back down to it. Wouldn't be surprised if it tries to get over it again. In the Rebob gasoline, wow, are we going to have a phenomenal driving season this spring? You've just taken the market from basically into this range, the 170s, into $1.35 a gallon. 20-some odd percent break. You were down this week alone, 15.5%. That's just a monster break. Do you think that hurts the American consumer? No. But you've got to get beyond this COVID, and I don't know how you do that until it happens. And that's what you got to pay attention to. And what I'm doing is each morning at 5:45 in the morning, I start recording a video including 40 charts. I've read the Asian newspapers. I've read about what's going on in different areas. European, and I'm bringing you a mixture of, number one, the fundamentals. Number two, what's the economic data of the day? Number three, do I have any ideas to trade from? And you know what I did most of this week? I told people not to trade. Looking back, probably the best advice I could have given anyone. I think we had one trade in cocoa at the beginning of the week. That was it. And Luckily, it made something. I lose too, believe me, in my wrecks. They go both ways. But that was it. And then I had an eye operation, and I admitted on Tuesday I was out of the loop pretty much on Wednesday. And then I looked at this and said, why do I want anybody into anything going into this weekend when these disease numbers keep going? And in the U.S., they're picking up. There's a point where you put your hands in your pocket, as hard as it is, and you go, I'm not going to be a hero. So I cover the 40 charts. It's that simple. And I do say buy here, sell there, or do nothing. I'm not scared to say do nothing. And I'll give you the entry points, where I'm right, where I'm wrong, stops on even a profit position, stops to limit a loss. Goes every which way, profit objectives on them. But I'm going to do it in a certain way where the charts look different. That's number one. There's more studies on them, and I really am able to let loose. The charts will be this way. They're going to be jet black on here. Then you're going to have more studies than you get with the way that we're working, more moving averages. Then I'm going to cover these markets in a unique way every single time. And the reason I do that is on the website when we post it, or when I post it early in the morning, because I'm really by myself at that time. I'm not in that video. I'm wearing a headset and talking to you. There's a scroll bar at the bottom. Let's assume you want to go to the energy market. You can scroll right to it. Want to watch the whole video? Fine. You want to go to the metal section? Scroll over to it. It's always in the same direction and always easy to view. You can also view it in our charting software, but the charting software does not have the scroll bar. It's only going to be on the website. And for the near term, what I've been giving is also my Spider ETF video. That's even more money than these. But I'm giving that away because I'm just about to introduce them with their subscription. How much is this? I do charge for it. If I'm getting up that early, putting all the effort, I'm up at 4:30 reading like a madman for you. Well, I want an introductory fee of $7.95 for the first 30 days. There is no contract for this. If you want to let it roll, it's $15 every 30 days thereafter, and at any point you can go to a one-year subscription. That works out to about $13 a month. You know why I made it that? That's about a tick in the S&Ps, the Dow. Just think about it. The grain markets, the currency markets are $12.50 in many of them, bonds and notes. I want it to be close to a tick. And if you can't afford a tick for the ideas, don't bother. But to go to our website and do this and to find out how it all works, go right here. Under the word research, you'll see it. If you want to take the charting course, it's under the word education. You're also going to see pages very shortly about our ETF spiders. And so you'll know I've put up the ETF spider daily window envelope numbers now in the members login of everything I'm doing. So I would say next week we're probably going to launch and then some of the free trials. And we'll always give a free trial to our Spider ETF video, but we're ready to go what I call full-blown out of alpha and right into the actual product. Well, I wish you all a great weekend. I will see you all Monday. Take care.